Welcome back for the 16th episode of Talking Economics with the Commonwealth Bank of Australia's Chief Economist, Stephen Halmarick. Stephen, thanks for joining us.
My pleasure, thank you.
Stephen, a lot of global uncertainty at the moment impacting markets, and of course back at home it's all about cost of living and inflation. Your thoughts at the moment?
Yes, we've certainly seen a lot of volatility in markets, bond markets, currency markets, credit markets. Really what this is centred on is concerns that interest rates may have to stay up higher for longer to really control inflation. So a few of the major central banks, including the US Federal Reserve, have signalled that they may need to raise rates a little bit further. And even if they don't do that, they may have to keep interest rates up at these relatively high levels for a little bit longer to really be confident inflation is going to return to target. So markets have been trying to assess how long do interest rates stay up these levels, how quickly will inflation get back to target.
Of course, you've just released the CommBank Household Spending Insights for September. What did that data show?
So that showed an increase in spending across Australian households of 0.5% in the month of September, really led higher by things like hospitality spending and food and beverage. And we think some of that was related to the football grand final series throughout September. Victoria was the strongest state in the month of September, and quite unusually. Victoria's been a bit softer. So we think it definitely showed there the impact of some extended holidays and the footy grand finals. We also saw increases in spending on transport, and that's really related to the price of petrol. So transport spending was, the biggest increase in transport spending was at service stations. We know that fuel prices were up about 3% in the month of September, and that translated into a 1.5% increase in transport in the month. The other sector that's been seeing some pretty strong increases in spending recently is education. And that's a combination of foreign students coming into Australia as well as some price increases for education here. Now that's been offset by some reductions in spending elsewhere. So 5 of the 12 spending categories actually declined in the month of September. Things like utilities, which is the government's rebates working, hospitality, but also the basics, if you like, household goods and household services have seen some weakening in spending. Just to round that off, the increase in spending for the year to September was 1.8%. And that was down from 2.1% in August. So compared to this time last year, growth's pretty soft. And we have to remember the 1.8% increase is before we take account of inflation or population growth. So after you take account of inflation and higher population, spending's actually declined relative to September last year.
So what sort of data points should we be on the lookout for?
Well, so over the next few weeks, particularly into the next Reserve Bank board meeting, which is early November, or Melbourne Cup Day, we've got some key labour force numbers, so employment. They have been quite strong recently. The labour force report for August was very strong. The unemployment rate steady at 3.7%. We would be expecting to see some softness coming into the labour market numbers, but certainly the labour markets remained a bit tighter than we had thought. The other key number will be inflation, which is out on the 25th of this month. That's for the September quarter. We know that in July inflation was 4.9%, in August it was 5.2%. So for the September quarter, a number around about 5 is what we could expect to see. And then we get into the Reserve Bank board meeting in early November. So our base case is the Reserve Bank keeps rates on hold at that meeting in November.
The cash rate, of course, was left on hold this month. Yeah. What are your thoughts on the direction of rates?
Yeah, so we actually have rates on hold now, been on hold since June. So it's actually a few months in a row now. And as I mentioned, our base case is no increase in November. But it is worth saying that the Reserve Bank does have a tightening bias. They keep saying that further tightening in monetary policy may be required. And those numbers that we just talked about, particularly that inflation number, will be critical to see whether the Reserve Bank does need to raise rates again in November. And then on the 15th of November, we get the wages number for the September quarter. And that's going to be a critical number as well. That'll include things like the recent national wage case increase, higher pay raise increases for public sector. And so that would mean that the December RBA board meeting could be live as well if the wages number middle of November is quite high. So there's a lot going on in that space, but our base case is rates on hold all the way through to May 2024, when we think a rate cut cycle can begin. but certainly over the next 2 months, November and December, there is still a risk of a final increase in interest rates from the RBA.
Taking all of that into consideration, how are higher rates or rates impacting business?
Well, we can see from things like the private capital expenditure surveys that businesses remain relatively confident about the outlook. There's an expectation of some increase in business investment, particularly in the non-mining sector, through this financial year. Some of the other indicators on business, things around confidence, have been a little bit softer. So we still have some of the higher interest rate impact to flow through the economy. It won't be till early 2024 before the full effect of the higher interest rates are being felt by households. And we do expect the pace of economic growth to soften over the next 6 to 12 months. So for businesses, it's a bit mixed there, but overall, it does look like the economy and particularly the business sector is getting through this period of higher interest rates in relatively good shape. And then business investment looks like it's going to pick up through the course of this year. So that's a relatively positive outlook for that sector.
Stephen, great to chat. Thanks for your time.
My pleasure. Thank you.